This is Shelley Craft coming to you live on SNN Live. We're at the Sprott Natural Resource Symposium, Vancouver 2014. I have with me Mr. Frank Holmes, U.S. Global Investors, Inc. It's a publicly traded company on NASDAQ, and the symbol is GROW, short for growth. Frank, welcome to SNN Live.
It's great to be here. Go grow.
So let's get a first indication. Tell us about what GROW does.
Well, we're asset managers, and we're known for resources, emerging markets. We have what's famous, the Investor Alert, that's read by 40,000 people in 170 countries around the world. And that's what and I wrote a book on gold. So often I'm asked about gold.
Well, I know you from the book, and I know you from gold. So I would ask the same question. Tell me about gold. But can we focus on gold for a minute?
Sure.
Okay, so let's get right into it. What's going on with gold right now, and where should it be in one's portfolio, if you don't mind me asking that?
Well, there's two big questions, and the simple one is the 10% rule. We believe that all investors should have a 10% allocation towards gold, 5% bullion or gold jewelry, and 5% gold stocks, and rebalance each year. So last year, stocks were down, gold was down, stock market was up. You would have profited by taking profits off the stock market and then buying more gold at a discount. And year-to-date, gold stocks and bullion have had a spectacular run. So this 10% rule just helps you to have a discipline, not to go out to try to get rich in gold overnight, but have a balanced portfolio. Now, what's also taking place, what drives gold, is that most investors in North America are consumed with fear. And it's called we like to call it the fear trade. And fear trade is only half of the drive that took gold to $1,900. The other half is the love trade. And the love trade has to do with rising GDP in poorer areas of the world, and we've seen a dramatic increase in growth in India, China, Vietnam, all of Southeast Asia. And as GDP per capita rises in these countries, they just buy more gold for love.
You're a lover. You have to be a lover.
And there's a magic to that too. So you want to buy some gold jewelry for the one you love before you buy a gold stock. Because if the gold stock goes down, then you're not going to get in trouble.
So the other thing is there any particular time of year that you should be going into the gold market?
Well, the fear trade has to do with what's really important for investors to recognize in the fear trade is negative real interest rates. So last year, actually for the past couple of years, we had minus 2% you're losing on government bonds, and then it went to plus 50 basis points by December. Well, gold fell. Now, since December, negative interest rates have been creeping higher, and gold has been rising. So that's a real key component of this fear trade. And I think you're going to have to live with more and more of this sort of low interest rates, negative real interest rates, because the government has to try to do everything to maintain economic activity.
Sophisticated investors take your information, they calculate it against their existing portfolios, and it helps them make decisions. There are a lot of investors out there that aren't very sophisticated. How do you come down to that level? I'm not putting anybody down for that, but how do you simplify the equation so that investors go, oh, I get it?
10% rule. Trying to calculate is it negative real interest rates, or trying to calculate is it the wedding season just starting in India versus the Chinese New Year gold demand, etc. All of that's interesting color, but by having a 10% and rebalancing each year, you protect yourself from the emotions of seeing gold run and everyone jumping at $1,900 gold.
Yeah. Now, you're a featured speaker at this conference.
I am.
What are you speaking about?
Well, I'll be speaking about my global travels around the world, just coming back from India, where you have 600 million people under the age of 25. That's 2 Americas. And today they're all wired and hooked up on Facebook, and they all want the American dream. So I'm going to comment regarding going this sort of trip around the world and what I see as global economic activity. And I'm going to also talk about gold, and I'm going to talk about the trend is your friend, how to identify trends.
How does the gold that the love trade takes out of the market get replaced in this current market?
Well, that's a great question, because there's a whole thought process that there's not enough gold around. And I really don't know. All I do know is that we're seeing a huge tectonic shift in bullion, leaving America in big bricks, going to Switzerland, being refined into smaller coins and wafers, and then going to China. So we've seen this now for the past 3 years, and it was well, the greatest was last year in this shift of gold.
So isn't that a boom for the exploration companies?
Well, the exploration companies are finding it more and more difficult. The bureaucracy, the environmental costs for here in Canada's First Nations, there are so many barriers to entry to turn around to even put a shovel in the ground, and so costly that it makes it very difficult to raise the necessary capital. So unless you already have a proven project, then it's very difficult to move forward for it. There's no, like we would have 20 years ago, grassroots exploration. That's only done by very wealthy, selected people.
So a deposit's still a deposit, but getting the money to begin is very tough, in your opinion.
Yeah, because the life cycle, what used to take you, like having a baby 9 months, can you imagine if your wife says she had to wait 9 years? All right, that's what's happening in the resource sector. What took everyone knew used to be 5 years is all of a sudden now 15 years. So what's the cost of capital? What are all the risks and delays? So people say, I'm not going to take that risk for 15 years.
But I still think, in my opinion, that these producers are using all of their deposits up, and it's either going to be replaced by doing a merger or an acquisition, or the exploration costs could be ginormous, as they say.
You're absolutely correct, but I think that the other part is to take a look at juniors, which already have environmental, and they just need capital to expand their operations or develop them. They're the ones that get bought out. But the grassroots explorer, very difficult to raise capital for.
Ladies and gentlemen, we're going to get a website right now for you to go check out more information, please.
usfunds.com. That's real simple. usfunds.com, and I recommend you subscribe to Frank Talk Investor Alert.
Ladies and gentlemen, Mr. Frank Holmes, U.S. Global Investors, Inc. It's a publicly traded company on NASDAQ, and the symbol is GROW. I'm Shelley Kraft. We're on SNN Live, and we are at the Sprott Natural Resource Symposium here in Vancouver, 2014. Frank, thank you so much.
Pleasure.